Welcome back. In the last session, we have discussed about how to find the profit and loss of a business concern that follows a single entry system. There are two methods, statement of affairs method and conversion method, and we have discussed in detail the concept of statement of affairs. In that, again there are two statements that has to be prepared. One is the statement of affairs itself, another is statement of profit and loss. In statement of affairs, you will be preparing a balance sheet. It cannot be called as a balance sheet, it's a type of a balance sheet. There will be assets and liabilities. It will not get the tally. We have to identify the total of assets as well as the total of liabilities, and there will be a difference in the liability sign. Usually it will be the capital amount. So we will be preparing two statement of affairs, that is statement of affairs on the basis of opening details and statement of affairs on the basis of closing details. And remember, in the question, if the opening and closing capital is already given, you need not have to prepare, but unfortunately university will not give such easy questions. They will make you prepare statement of affairs for the opening as well as closing. So once you prepare or identify the opening capital and closing capital, next you need to prepare statement of profit and loss. There you will be comparing the differences between the opening capital and closing capital, and the resulting amount will be the profit or loss of a business concern that follows a single entry system. So let us further discuss about the theoretical aspects and some of the practical cases regarding the same topic. Previously we have discussed about these points. Next one, difference between a statement of affairs and a balance sheet. We have mentioned that statement of affairs is almost similar to a balance sheet case. In both cases also we will be recording assets and we will be recording liabilities, but one is known as balance sheet and another is known as statement of affairs. So let us discuss the differences. The statement of affairs is prepared under a single entry system, whereas a balance sheet is prepared as per the double entry system. It's a very easy difference. Next one, financial position disclosed is not reliable. Yes, exactly. This statement is prepared in order to find the opening capital or closing capital during a financial period. So we cannot say that the statement of affairs depict the financial position, because in your previous classes or we have learned that balance sheet represents financial position. So statement of affairs is almost similar to balance sheet, so it cannot be considered as a statement that represents financial position, because it is prepared to identify the opening capital or a closing capital. So financial position cannot be disclosed or it cannot be reliable, whereas balance sheet is prepared to know the financial position of a business, that is prepared for this main purpose for that. So it is a reliable statement. Statement of assets and liabilities from incomplete record. We know about the concept about that, because single entry system, it doesn't record all the transactions, and statement of affairs is prepared to know the opening capital or a closing capital, so it is on the basis of incomplete records. Whereas balance sheet is prepared on the basis of balances extracted from subsidiary books or ledger accounts or whatever the accounts that we have prepared by following the double entry system. So it is reliable and correct. Here the capital is the excess of assets over liabilities. We have mentioned that because statement of affairs is prepared to identify the opening capital or a closing capital, whereas in balance sheet capital account is taken from the ledger balances. Yes, in balance sheet we are preparing the balance sheet on the basis of the values of assets and liabilities from the concerned ledger balances or trial balances. And finally, ascertaining profit and loss as well as the financial position. Here the statement of affairs, we have mentioned that in single entry system, in order to identify the profit and loss of a business, you need to first of all prepare statement of affairs. After that, statement of profit and loss account. So why we are preparing statement of affairs? It is prepared to ascertain the profit or loss as well as the financial position. We cannot relay that the financial position represented by the statement of affairs is correct. We cannot rely on that, but it is prepared for the purpose of finding profit and loss. Whereas in balance sheet, why we are preparing balance sheet? Because it shows the financial position of a business as on a particular date. So these are the major differences between statement of affairs and a balance sheet. Go through these differences, you may come across questions regarding like this. Next one, profit and loss account and statement of profit and loss account. So what is the differences between profit and loss account and statement of profit and loss? Here the profit and loss account means profit and loss account prepared as per the double entry system, that is trading profit and loss account balance sheet. I hope you have heard about that term. That profit and loss account is this one, and statement of profit and loss account is just now we have learned. See this one, statement of profit and loss account. This one is known as statement of profit and loss account. This is a second step that has to be followed while computing or finding out the profit or loss of a business concern that follows a single entry system. So what is the difference between these two? First one, this profit and loss account, this one is prepared under double entry system. We all know that. Here it is prepared under single entry system. It's a very simple difference. Next one, it starts with gross profit or loss. We know that in trading profit and loss account, first one is trading account, and the first part is prepared to identify gross profit or gross loss. After that we will be preparing profit and loss account. We will not give any heading like that, but we know that the second part is profit and loss account. It begins with gross profit or a gross loss. Whereas statement of profit and loss account, it begins with the capital at the end, or otherwise known as closing capital. If you remember the statement which we have mentioned in the previous session, you will get an idea. It is an account. We all know that trading profit and loss account. We have been using the same term for years. Whereas the statement of profit and loss account is not an account, it is a statement. So remember that statement of profit and loss, it is a statement, not an account. Remember that. Next one, it is prepared from the ledger accounts only. As we know that trading profit and loss account is prepared on the basis of trial balance. Trial balance, how we are preparing trial balance? Trial balance is prepared on the basis of ledger account. So profit and loss account is prepared from ledger accounts, whereas statement of profit and loss is prepared partly from ledger accounts, partly from estimate. That means we prepare statement of affairs on the basis of statement of profit and loss account on the basis of statement of affairs, or on the basis of some of the accounts which we have prepared, on the basis of some vouchers we have kept. So there is no reliability. We are preparing on the basis of the available information here and there. So it is prepared partly from ledger account. Ledger account means we were preparing personal account. So we have details about the personal account, but no information about real accounts or nominal accounts. It is prepared on the basis of vouchers and estimates. And finally, it considers purchases, sales, returns. Returns means sales returns and purchase returns, expenses, incomes for ascertaining profit and loss. But in statement of profit and loss, we will be comparing only opening capital, closing capital, and if there is any drawings during the year, and if there is any additional capital during the year, we will consider that, and on the basis of that we are identifying profit and loss. If you go through the statements which we have mentioned previously, you will understand that's the point. So these are the major differences between profit and loss account and statement of profit and loss. So go through all these two differences. Remember, even though it is a problem paper, you have to give considerable importance to the theoretical aspects also. So these are the two differences. Let us go to the next one. Next case. So let us deal with the practical areas. So first case, Question: X keeps his books under a single entry system. The details of the assets and liabilities during the period is given. See, 31st December 2016 and 31st December 2017. I hope you know the meaning of these two dates. This is the opening period of a financial year, and this one is the closing period of a financial year. We will be using the terms or the dates like this. So it represents opening and closing balances. So in the question, sometimes they may directly given opening balance or closing balance, or sometimes they may give dates like this: 31st December 2016 and 31st December 2017. The same can be given like this: 1st January 2017. 31st December 2016 and 1st January 2017, these two dates are representing the same, that is opening balance. So it might depends upon the nature of the question. So I hope you are familiar with the terms given and the dates given. Okay, these represents opening balances, these represents closing balances. So cash opening and closing is given, debtors opening and closing is given, stock opening closing is given, plant also given, creditors also given, bills payable. During the year or 2017, he introduced 5,000 as additional capital, and at the same time he withdrew 600 every month for his domestic expenses. So remember that. So ascertain profit. So a concern following a single entry system, how we are going to identify profit? On the basis of method which we have learned. First one, statement of affairs. Under that method you have to prepare two statements. One is the statement of affairs itself, another is statement of profit and loss. So first of all you have to prepare statement of affairs. There will be two statement of affairs. Can you mention that? Why we are preparing two statement of affairs? Yes, first statement of affair will be opening statement of affairs, because we need opening capital. Because if you go through the question, you can see that there is no information regarding opening capital and closing capital. And similarly, you have to prepare the closing statement of affairs in order to identify closing capital, because we need opening capital and closing capital to identify profit. So first of all, let us prepare an opening statement of affairs. First one, statement of affairs as on 31st December 2016, that is opening statement of affairs. It is mentioned from the date or time given here. It will be prepared just like a balance sheet, liabilities, assets. So let us write down each of the details given. First one is cash. What is cash? It is an asset. Cash 5,000. Next one, debtors 5,100. After that, stock 5,900. Stock 5,900. Plant and machinery 9,000. Current assets and fixed assets are written in the same side itself. Not worry about the nature of the assets. Next one, creditors. We all know what is meant by sundry creditor. Remember the sundry debtors and sundry creditors. Sundry debtors and debtors, these two are same. Sundry doesn't, you need not have to worry about the term sundry. So in the question, sometimes we may mention cases where you will be using only creditors or sundry creditors likewise. So don't worry about it. If you find C debtors or creditors, consider it as a current asset or a current liability. Sundry creditor, it is a current liability. Since we are preparing the opening statement of affairs, you need to consider only this amount, 3,900. And finally, bills payable 1,500. So why we are preparing statement of affairs? We are preparing statement of affairs to identify the capital. Since it is a statement of affair on the basis of the opening balances, it is a opening statement of affair. So the result from this statement of affair will be opening capital. How you are going to find the opening capital? I have mentioned that even though it is almost similar to a balance sheet, you cannot tally these two sides. If you take the total of assets and if you take the total of liabilities, there will be a difference. So here the total of assets will be always bigger. I hope you all know how to balance a statement or an account. Whatever the side having the biggest value, you will consider that as the total and show it in the both side. See, in this case here this side is having 25,000. Here if you add together you will not get 25,000. So you are writing 25,000 in both sides. See, is there any difference with regard to this side? Yes, exactly. Here is only 3,900 and 1,500. So the remaining amount will be the opening capital. And this will be the balancing figure of a statement of affairs. This is the reason why a statement of affairs different from a balance sheet. Balance sheet, if you are taken all the values, you can tally the statement. But in this case, you will not able to tally. Here we are preparing statement of affairs in order to find the missing value. Mainly, it will be a capital item. So, statement of affairs for the opening has been completed. So, for identifying or ascertaining the profit or loss during a period, you need two capital. Opening capital and a closing capital. So we have prepared opening capital. Next you are going to prepare statement of affairs as on 31st December 2017. Just like a statement of affairs we have prepared now on the basis of opening balance, the same pattern will be followed in this case also, but the only difference is we will be taking the amounts of the closing period. So first one, cash, and by the end of the financial year cash is 2,900. Same. Next one, debtors, closing balance is 7,100. Stock, closing balance is 5,800. Plant and machinery, closing balance is 11,000. Sundry creditors 3,200. Bills payable 2,000. And the same pattern here also will be followed. You have to take the totals of these two sides. The highest value has to be given in the both sides. Here this side is highest, so 26,800. It will be written on the two sides. And if you take the difference, you can see that there is a certain amount of 21,600 that has been obtained as a balance from this side, so it is considered as the closing capital balance. So as per the question, we have prepared two statement of affairs. One is opening statement of affairs and another is closing statement of affairs. Why we have prepared is in order to identify the opening capital and the closing capital. Once you found out the opening capital and closing capital, next you have to prepare a statement of profit and loss account for profit and loss for the year ended 31st December 2017. Never use the term account because it is a statement. So statement of profit or loss. So it begins with closing capital. So closing capital means capital by the end of the year. Here the statement of affairs, this one is the statement of affairs as per the closing date. Capital balance as per the statement is 21,600. So it has to be recorded here. From that you need to add back any drawings during the year. In the question it is mentioned that during 2017 he introduced 5,000 as additional capital. Apart from that he has withdrawn 600 every month for his domestic expenses. Everyone prepare statements to know the profit and loss for a financial year. Financial year consists of 12 months. Here he have taken 600 every month. So in a financial year how many months are there? 12. So for 1 month he has taken 600. So total how much amount has been taken during the financial year? So 600 into 12. You have to consider like that, because we are preparing these statements to identify the profit or loss for the entire period. So the detail of 1 month cannot be considered. You have to consider all the details during the financial year. So 600 into 12, 7,200. So you will get an amount. From that amount, you need to deduct any of the additional capital introduced by the businessman. So here it is mentioned that during 2017 he introduced 5,000 as additional capital. So you need to deduct additional capital investment 5,000. So you will get 23,800. From this amount, you have to deduct the opening capital balance or capital on 31/12/2016. Then you will get an amount 4,200. Since it is a positive value, we can consider it as the profit earned by Mr. X during the period 2017 is rupees 4,200. So this is how you have to prepare a statement of affairs and a statement of profit and loss account for a period or during a financial year. So in order to find the profit and loss, you have to prepare a statement of affairs, especially for the opening as well as closing date. After that, you have to prepare a statement of profit and loss for the year ended that is specified in the question. So this is how you have to deal with a question. I hope you have understand the concept. Go through the theoretical aspects and familiarize the forms which we have learned. Form means the statements which we have learned: opening statement of affairs, closing statement of affairs, statement of profit and loss. Because these questions, these are very simple questions. On the basis of these statements, you need to prepare final account. That is a essay type question which we will be expecting in a university exam. So in order to prepare a final account, that is trading profit and loss account, you need to prepare these statements. So you go through all these statements, familiarize each step, why certain amount has been taken in such and such sites. Just go through it, understand the concept. If you have any queries, please let me know. We will discuss about the further cases in the coming session. So let us go to the another case regarding the same area. Next question. Raj Mohan commenced the business on 1st January 2016 with a capital of 30,000. Oh, in this question they have directly given a capital balance, opening capital balance. Anyway, just go through the entire question, then only you can finalize it whether we have to prepare opening capital statement of affairs or not. 24,000 bought in cash and the balance in the form of machinery. Out of 30,000, 24,000 was bought in the form of cash, balance in the form of machinery. On 1st October 2016, he introduced 15,000 into the business, of which 8,000 was borrowed from his wife. And during the year, he withdrew at a rate of 800 per month. His position on 31st December 2016 is as follows. These are details regarding the closing balances: stock, that is closing stock, sundry debtors, machinery, cash at bank, cash in hand, bills receivable, furniture. And with regard to liabilities, by the end of year there is creditors 8,700, loan from wife 8,000, bills payable 2,000. You need to find out the profit or loss during the period. In this question, they have directly given the balance of opening capital. So do we have to prepare a opening statement of affairs? No. Since opening capital is given, we need not have to prepare unless any adjustments with regard to that should have been mentioned. That is, it will mention that opening capital is given, so another some one of the other item is missing from the opening balance, you need to identify. So same, just like that, take the totals, bring the highest value in both sides. What is the difference? You can give any name. That is a other concept. So you don't have to worry about any further adjustment with regard to that. When opening capital is given, don't need to worry about that. If there is any adjustments, go through it. So opening statement of affairs is not necessary. So second step, you need to prepare a closing statement of affairs. So let us begin. Closing statement of affairs on 31st/12/2016. It is mentioned here. See, first opening date is given. If it is opening date is 1st January, then it will be, closing date will be 31st December. It is natural, we all know that. So let us begin. In the question it was mentioned that opening capital balance was 30,000, out of which 24,000 in cash and remaining it in form of machinery. And he also introduced 15,000 in the business, where 8,000 was borrowed from his wife during the year. He also withdrawn such and such. Okay, fine. So we are preparing statement of affairs, closing statement of affairs, and first one is store 13,000, after that debtors 12,000, next one machinery 8,000, cash at bank 3,500, cash in hand 1,200, bills receivable 4,000, furniture 12,000. So all the assets is given. It is mentioned that closing balances, so asset side is over. Next one, liability side. First one is creditors 8,700, loan from wife 8,000. It is mentioned here. Bills payable 2,000. So there are no other information regarding liabilities, and we all know that these two sides will not tally each other. Take the totals, but definitely asset side will be bigger value, so write down the biggest total in both sides, 53,700. If you take the total of this side, you will get 53,700. Here definitely you will not get the value 53,700. There will be a difference. That difference is considered as the closing capital, because we have prepared statement of affairs as on 31st/12/2016. So this is closing capital. So we have opening capital and closing capital. Once we have opening capital and closing capital, next what we have to do? You need to prepare a statement of profit and loss for the year. So let us begin that. First one, statement and profit and loss for the year 31st/12/2016. We will begin with opening capital or closing capital. Which one? We will begin with closing capital. So closing capital can be obtained from closing statement of affairs. Here it is given 35,000. You can write closing capital, or you can write capital at the end, or you can simply write the capital and specify the date. From that you need to add drawings during the year. In the question it is mentioned that during the year he withdraw amount 800 a month. We all know that in a financial year there are 12 months, so 800 into 12 you will get 9,600. So from 35,000 you need to add 9,600, you will get 44,600. From that you need to deduct additional capital during the year. But there is an adjustment with regard to that, because if you go through the question you can see that he introduced 15,000 into business. So whenever a businessman introduces a certain amount in business, we term it as additional capital. But out of 15,000, 8,000 was borrowed from his wife. That means loan. And remember, the same 8,000 is mentioned in the liability side. See here, and we already recorded in the statement of affairs. So out of 15,000, 8,000 is loan. So what is the actual capital introduced during the year? 7,000. That is, out of 15,000 you need to deduct the loan 8,000. So the difference amount is 7,000. So you have to write down 7,000. If you deduct the 7,000 from 44,600, you will get 37,600. From this you have to deduct the capital at the opening. In the question it is mentioned that the opening capital is 30,000. So if you deduct from that, you will get 7,600, which can be considered as profit during the year. So I hope you have understand the concept. Go through it. It is almost similar to the method which we have learned with a minor adjustment. But the thing is, you have to go through the question very carefully. This type of minor adjustment will be there in the question. So go through it wisely. I hope you have now got a clear idea about what is meant by statement of affairs, what is meant by statement of profit and loss, how these are prepared, why these are prepared. Just go through it. If you have any queries, please let me know. We will discuss about the further cases regarding the topic in the coming sessions. Thank you.